Thank you for tuning in to another edition of the Black Ops Trading tutorial. We're going to take a quick look at the sheet and look at some strategies and look at how to filter selections for trading. Alright, the first tab I want you to take a look at and concentrate on is the Quick Sheet tab. The Quick Sheet tab was designed to get you in the game quicker. Basically, you click on this tab and it brings up this page here, and this page is a quick glance of all the securities that we have in the list. And by looking at this sheet, it enables you to be able to find things a lot quicker. Now, I've used some color coding to help you along here. Let's go through it real quick. The blue color coding you'll notice is your financial futures, okay, like the Dow, the dollar, your currency futures. Here's the Nikkei. Scroll down, you have the NASDAQ, the E-mini NASDAQ, the Russell, E-mini S&P 500, okay. Then you'll notice also that we have this orange. The orange is just regular common stocks like Apple, Bank of America, Baidu, Google, Goldman Sachs, the semiconductors ETF is on here. Here's the VIX, and here's the XLF Financial Select Spider, okay, standalones that I highlighted. The next one you'll notice is the light blue. This light blue is your commodity ETFs and your commodity futures ETFs, all highlighted in blue. So like here's your silver, the AGQ Ultra Silver. Here's the cotton ETF. Here's cocoa futures, crude oil. Here's the corn ETF. Here's the cow livestock ETF. Here's the cotton futures. Scroll down. Here's your GLD, your gold. Here's your corn, wheat, and soybeans ETF. Here's your coffee ETF, coffee futures, live cattle futures, lean hog futures, and your agricultural, agribusiness ETF, MOO. Here's the cocoa ETF, palladium ETF, sugar futures, sugar ETF, silver SLV ETF. Scroll down. Gold and silver spot is really gold and silver futures, okay. Here's your corn futures, soybean futures, and your wheat futures. Alright, all colored in light blue. The next one you will notice is the yellow highlight. Yellow highlight is straight Forex, okay, euro, pound, Australian dollar, your yen, your Swiss franc, and your Canadian dollar, okay. The next category is green. Those are your financial ETFs, okay. Those are long only, like like the SPY, the DIA, the Dow Jones, S&P, and your ultras, okay, and your triples. So they're highlighted in green. Okay, here's the Dow. Here's the oil, crude oil, DIG, FAS. That's your triple financial. These here that start with the letter H is your Canadians, okay. Right now we have 14 Canadians on here, Canadian shares, okay. Most ETFs. The VIX is included in there too. Alright. Then in addition to that, the last column is in red, and that is your inverse ETFs, okay. So Doug inverse for the oil, his Dust inverse for the gold miners, DXD is your inverse for the Dow, FAS your inverse for the financials. They're all here, okay, even for the bonds, okay. And then of course ZSL is your ultra short silver ETF. All right, so there you have it. Right now we have a total of 94 things on here. There's still a lot to choose from, but it's designed to help you to be able to go through this quickly so that you can make faster decisions. And on the far left here under type, it tells you what type of security it is, whether it be a currency futures, stock, commodity, ETF, commodity futures, financial ETFs, inverse ETFs, or Forex. All right, it even breaks it down, let you know when you get down to the Canadian shares. Here they go right here. See, Canadian inverse ETF, Canadian financial ETF. All right, so there you have it. All right, so that's these first three columns here, columns C through C, D, and E. Okay. All right, you make your quick decisions with this sheet very easily. First thing you're going to look at is your columns. You want to look at your key reversal buy and your key reversal sell signals. Those are the first things you want to look for. Okay. As you can see, the first several ones don't have any key reversals. But when we get down to the inverse gold miners and the inverse Dow and the inverse financials, you see we're coming up upon some possible key reversals. Likewise, if you look over here to the right side of the screen, we have possible key reversal in the euro, and we have possible key reversals here in Apple. All right, so this is your sell side of the sheet right here. Obviously, it's in red. So your key reversal sell signals here. Your key reversal entry point is right here. It tells you key reversal sell trigger. Key reversal sell signal, key reversal sell trigger. This here is your pulse waves right here. There's a 1 in the column, so here's your trigger price right there to your right. Likewise on the buy side, here's your pulse wave price, here's your signal. Okay, so it's very quick. You can even do this. Brings up this screen here and just type in anything with the 1, and it brings up now all the pulse wave signals and their corresponding trigger prices. Likewise, you can do the same thing on the key reversal side. If you just want to play some key reversals, you come over here and you check everything with the 1. Now it brings up all your key reversals. Okay, so for the day, these are your plays that you have for your key reversals. Okay, on the long side, and then here's your corresponding trigger price that you're going to enter the market at. You have a choice to enter the market with either a buy stop or a buy stop limit. The choice is really up to you. If you think the market may gap up and you want to be filled on it, then by all means you can go ahead and you can do a regular buy stop order to get into the market. If you think the market's going to gap up rather significantly and you don't want to get filled right away, then you can use the buy stop limit. That way you can reassess after the market opens and determine if you want to be part of that action or not. And then that gives you the opportunity to go ahead and cancel the ticket. Generally, I like to enter the market on buy stop limits because I like to get filled at my price or better. I don't want to be skipped. I don't want to have slippage. That's the problem a lot with a lot of the ETFs and a lot of equities, period. They tend to gap up on the open. And you have no control over that because it's based on how the futures markets work at night. So if the stock index futures are up overnight, you may get gapped on your your Dow, S&P, and NASDAQ ETFs on the following day. So you miss out on some price action, which kind of sucks, but what are you going to do? So that's how you look at your quick sheet. Okay. Now let's take a look at the main sheet. Let's get really acquainted with the Armageddon sheet. Excuse me. The Armageddon sheet has all the bells and whistles on it. It is the new installment that we have. You still have the My Hit list that you can actually create and put together under the My Hit List tab. All right, you want to put your securities in this column here. This is the column that gives you the correspond. This right here is the ticker, and this right here is the description. Okay, so if there's a particular one that you like to trade, all you have to do basically is come over here and remove the ones that you don't follow, and automatically it will be populated under this column. And when you do the drop down list, you can just hit yes or no. If you hit yes, it'll bring up all the securities that are in your hit list. Okay, right now the hit list, my hit list is defaulted to all the securities that are covered on the sheet. All right. Then you have the my hit list. My hit list is, if you haven't figured it out by now, all the securities on the sheet. And then market, US or Canada. Okay, so it's broken down for you. The type is filled in, same as the quick sheet, let you know what type of security you're trading. Here's your ticker symbol, and here's your security name. Alright, now let's get to it. You'll notice that you still have all the same things you had before, but now it's just a little bit different because we've added some things for you here. Alright, you see here you have your 12 to 18 month initial long profit target. You still have your pulse wave buy triggers, your pulse wave buy signals, your confirmed pulse wave breakout key reversal buy trigger, and your confirmed pulse wave breakout key reversal buy signals. What I added for you is the 50-50 rule. Okay, 50-50 allows you to trade your favorite securities when there is no key reversal buy signal and no pulse wave buy signal. These are your two primary signals right here. All right, starting with the key reversal. You look for key reversals first, pulse wave second. And what I've done is I've added a 50-50 so that the 50-50 allows you to trade on the right side of the market even though you don't have a signal to trade for the day. So let's say you like, for example, you like to trade, let's say, let's just pick one here. Let's go with the Australian dollar Forex. All right, that's your favorite market to trade. You love that market, and you're very familiar with the market and the price movements. But there's no signal today, as you notice. There's no key reversal buy signal, and there's no pulse wave buy signal. Okay, but you like this market, and you want to be able to trade this market, but you're not sure on if you should go long or short, and at what price. Alright, just keep in mind that when you do the 50-50 that you're looking for short profit targets. Alright, basically you're in the money, you take the money and run. Okay, sometimes you can catch runners and you control the position, but often, more than not, you're gonna get a few points, and then you can just go ahead and get out the market. So 50-50 tells you if you should stay on the sidelines or if you should buy and what the conditions are. For instance, on the Australian dollar, your 50-50 is a continuation pattern. Alright, and it says take the second long and watch for reversals. Okay, your intraday resistance is your second long. Likewise, your intraday support is your second short. So you enter the market on the intraday resistance second long, and here's your price trigger here. Okay, very simple. Everything else is the same. You have your rally alert signal, high alert signal, and your initial and trailing stop and reverse price as well. Okay, this is where you'll put your stop. This is where you control your position, and this is where you can also reverse and go short. Likewise, over here we put in some technicals for you. This here's your Kumo and your Ichi. Okay, so here's your T and K cross lines, let you know if you have a bullish TK line or a bearish TK line. Under the Kumo cloud, let you know if you're in a bullish trend or a bearish trend, or if you're in the Kumo cloud of death, like you have entered now in the Australian dollar. Okay, it gives you your Kumo cloud resistance and your Kumo cloud support prices as well. So you'll know, like here in the Australian dollar, we have a very narrow cloud where the top side is at 106.74 and the bottom side is at 106.31. So it's a pretty tight cloud. And also, here's your trend indicator, let you know if there's a 1 here, you're in a bull market. If there's a 0 here, then you're probably either in the Kumo cloud of death, or you're more likely in a bear market. Here's your long-term trend line support, letting you know where that is. Likewise, in Australian dollar, it's all the way down to 93.87. Alright, so this is the bull side of the screen. Next video, we'll take a look at the bear side of the screen. Remember, take what you can and give nothing back.